Japanese candlesticks. Japanese candlesticks are a technical analysis tool that traders use to chart and analyze price movement of securities. The concept of candlesticks charting was developed by Munehisa Homma, a Japanese rice trader, during a routine trading. Homma discovered that the rice market was influenced by the emotions of traders while still acknowledging the effect of demand and supply on the price of rice. Japanese candlesticks provide more detailed and accurate information about price movements. As compared to bar charts, they provide a graphical representation of the supply and demand behind each time period price action. Each candlestick includes a central portion that shows the distance between the open and the close of the security being traded. The area referred to as the body. The upper shadow is the price distance between the top of the body and the high for the trading period. The lower shadow is the price distance between the bottom of the body and the low for the trading period. The closing price of the security being traded determines whether the candlestick is bullish or bearish. The real body is usually green if the candlestick closes at a higher price than it opened. In such a case, the closing price is located at the top of the real body and the opening price is located at the bottom. If the security being traded closed at a lower price than it opened for the time period, the body is usually filled up or red in color. The closing price is located at the bottom of the body and the opening price is located at the top.